And next week, we'll hear from the Dallas, the Richmond, and the Kansas City Fed and get our first read on Q1 GDP. Joining us with some expectations here at Post 9, the Bank of New York Mellon head of U.S. Macro, Sonia Meskin's with us. Thanks for being with us. We appreciate the time. We were just talking to Schwab, and we've been talking about the Fed all week. Is the trajectory of the commentary feel pretty sturdy to you, about May at least?
Yes, I think that the decision about May has pretty much been made. What I would say is both the Fed and investors are probably thinking more about June.
So June, you think, is possible? There's not a non-zero risk of June?
I would agree with that, and I think that really what investors will be looking for, what we will be looking for, is what sort of indication, if any, Chair Powell, the statement, any kind of commentary even before the meeting would tell us about the possible move in June.
All right. Should we be taking this morning's PMIs and Europe's PMIs, for that matter, as reliable indicators, or is some of this survey data, the softer data, still a little bit suspect?
I think that data has generally been quite mixed. We had some, the Empire State in the U.S., the Philly Fed, the headline was not that strong, but the underlying, I think, components were quite a bit stronger. So the data generally has been mixed, and it hasn't given us too much direction one way or another, I think, on net.
Right. What is your number for Q1 GDP next week?
Well, I think the GDP is actually potentially could top 2%, so I think it could be quite strong. Whether that is sustained is a different question, but generally I do think the data has surprised. I think in real terms, at least, the GDP might surprise on the upside.
The data has been crazy. I mean, New York Empire State, manufacturing's great. Philly Fed, down 30 points. And then we get today's, it's very confusing. What is actually happening in manufacturing and in services?
I think that, some of this is sentiment versus real data. And that dichotomy we actually have witnessed for quite some time already, like at least a few months, definitely 2022. So Philly Fed, great example. The headline, which is about business sentiment, very low, but the underlying components, shipments, new orders, quite a bit stronger.
If I were going to ask you about lagging indicators that were poised to crack first, would you be looking at shelter or wages?
I would look at at wages more than shelter. And I would tell you why. I do think there is some dichotomy in wage indicators as well right now. The ECI and Atlanta Fed numbers are quite a bit stronger again than the average hourly earnings, for example. Shelter is its own thing in the sense that, yes, it's very interest rate sensitive on the one hand, but on the other hand, structurally, I think we're still low on supply. So it's hard to disentangle, I think, those two forces.